Good evening. This is the Elliott wave update for the NASDAQ 100 for Thursday, October 21st, 2021. A funny thing happened on my way to do tonight's update. And as I was looking at the market and I was trying to figure out the count and make any updates that I needed to make, I happened to look and see that the NASDAQ was declining rather quickly after the close. And then I kind of looked over and thought, well, what's really creating it? And I saw that Intel had reported their earnings and the stock was down about $5, but I didn't think that should bring the NASDAQ down 100. And then Chipotle actually, they liked the earnings and they were taking the stock all the way up from another $60 from where it closed. So it closed up 20, they had it up 80. And then I started to really kind of get a phone call from a trading buddy who asked me, hey, what did you do to Snap? And I'm like, Snap what? He said, Snapchat. And I said, what are you talking about? And he said to me that Snapchat was down 30 bucks. And I'm like, Snapchat is down 30 bucks? And just for the grinning, let's take a peek at that hourly chart. This is Snapchat on the close. This is Snapchat after they reported their earnings. Now, they didn't just report their earnings. They then downgraded forward guidance. Big no-no in today's market world. You don't do that. You are always expected to be rosy about what's going to come in the future, not like we better pull it all back in. So, Snapchat dropped like a stone. Right now, it's trading back about 57 because everybody thinks, well, you know, you just always got to bounce. Doesn't make any difference. But Snapchat got one better because they blamed Apple for their woes. Literally, that's what I read in the news. They blame Apple for having to guide lower for the fourth quarter. Back at the ranch, I start to take a look to see what else is going on. Social media is getting smacked left and right. Facebook had dropped down over $20. Now they've gained some of that back. Amazon had dropped down over $20. Now they've only gotten it back to $20. And then I'm just starting to watch these individual companies. And again, Intel was the one that really disappointed with their earnings and guidance, and it was still only down less than $5. I'm like, well, what could possibly be this modus or impetus that's going to kick the market out of this stratosphere high gear buy mode? And I've been discussing it in these updates. I'm saying, well, we're continuing to go up. It's a B wave. B waves are deceptive. B waves are just crazy, screwy, head in one direction, like the whole world is behind them, and then end in a second and die. Well, then I looked at today and I thought, could it be that social media would be the catalyst that's going to drive the NASDAQ, the S&P, the Dow, and the Russell down into the sewer? Maybe, very possibly, maybe. Now, as I stated in the S&P update for tonight, the S&P was within $6 of its all-time high, just before it decided to drop $13. The NASDAQ was up at 15,475 before it decided to drop to 15,368. All in a hot 15 minutes. So it was quite impressive for an after hours move. And we'll see, because we have Globex starting in about 35 minutes. And that we'll see how the world wants to treat this. I still believe, actually, the market's going to have to prove to us that was it. Today's high, completed this wave 5, after I put the 3 here and the 4 there and moved all of my Fibonacci extensions higher. I planned and thought, yeah, we should easily get above the old high, create some new all-time highs, start getting up to, with the possibility of getting above 16,000. Well, that would have taken place had Snapchat kept its damn mouth closed. And I say that in jest. Reporting earnings is reporting earnings, and you just got to come out and give the bad news or the good news or whatever. But they've been buying everything under the sun on the basis that it was all going to be rosy news. Whoever told them that, who knows? Well, guess what just kind of came out? Read this headline. Markets may be overheating, an analyst says. So really, you think it might be overheating. Okay. So I have been saying all along here that the markets are moving higher on a hope, a whim, and a prayer. Well, I guess the prayers aren't being answered, the whim is getting found out, and the hope is fading quickly. Now, here's what we need to be prepared for and to be able to trade. I still think that the markets will try to go up tomorrow. Depending on how these buyers line up overnight, if they're willing to put aside all of this talk about Snapchat, their bad earnings, Intel's so-so earnings, et cetera, Chipotle even. Chipotle's earnings were, the stock closed at $1,843. That's up 20. The stock ran up to 1880, like that. Snap your fingers, Snapchat, and the stock was up to 1880. It's now, so that would have put the stock up 60 above the close. Now it's trading at 822, which is putting it down 23. So anybody's guess on really what tomorrow's going to bring. We still have to open up in Gorbex. We still have to give all of this over to the Asian markets to see how they want to interpret it, particularly China and Hong Kong, or Shanghai and Hong Kong, and what their markets want to do with social media, et cetera, because they've already been against it. So who knows? And then it has to then roll over to Europe, and they get their turn to voice their opinion on everything, plus what might be going on in their own markets, before it returns back over to the US, and we get to open at 9:30 tomorrow morning Eastern. So a lot can happen. But here's what this picture looks like right now. We have now come and broken. That's not going to work. Let me go back and try that one again. Go to the 4 hour. Go back to the 1 hour. Although the 4 hour is a good place to start. Let me open this up so we can take a peek. Look, it broke the 4, it broke the 8, it broke the 20. It's trying to get back above the 20. I would imagine that once they start Globex, that would be their first move. Get it buy it back up there. If not, and it comes down and it breaks the 50, which is at 15,358, our next step is 53.16. And if it breaks there, now there's going to be higher and stronger evidence. Remember, look at this, 1, 2, 3, 4, 5. It did 5 up. And I was willing to say that's 1 of 5. It might be all of 5. And if it is, we're not going to have to wait until next week for Facebook's earnings, for Amazon's earnings, for Apple's earnings, for Microsoft's earnings, for all the rest of them that are still hanging out there. AMD, their stock went up after Intel reported. And chips versus chips, I don't know, but they were all maybe moving money into AMD. But there's still a fair amount of earnings yet to come out that we need to know more. Google needs to come out, et cetera, et cetera. Google, by the way, went up $30, $20, excuse me, $20 on the Snapchat. Facebook's loss, Google's gain in terms of advertising revenue. Let the games begin. So, upside. They really can't start bringing this thing down and then expect to just turn it around and whip it and take it up to new highs. Now, having said that, let me emphasize, oh yes, they can. So I did it that way. So just to show, even to me, making a statement of what they can and can't do, no way. It's a recipe for disaster. So we have to stay totally open for what the possibilities could be. And they could just turn this around and start bringing it back up, take it above today's high, then to the first wave 5 resistance at 15,501. Now, I wouldn't expect anything more than a little slight pause there if this rally were to continue. Then we have 15,615. A lot of overlap right here at 15,709, where that's where the old all-time high sits. That could also be in play. Then we have 15,801, 870, 930. These are still realistic, but here's the give. The market has to turn and go, not pretend, not just give us a little bit. It has to turn and go. Anything without really buyers en masse coming back in going like best price since sliced bread, they're going to have to take it up. If they don't, then I am looking for lower levels. I would expect the sellers to swarm them and just start pushing lower. Now, here's the added ingredient for tomorrow. It's Friday. It's an expiration Friday. Not the same size as it was last Friday, but it's a weekly expiration nonetheless. All of these stocks that we're mentioning right now, excuse me, all of these stocks we're mentioning right now, they have expiring options tomorrow. When Facebook drops $20, it slides through a whole bunch of strike prices. And I will just kind of give you a little bit of a hint. So bear with me while I go over to another chart, and let's just take a look at what happens. Thank you. Let's take a look at Facebook. Now, Facebook's options that expire tomorrow, you can see the 340s, and that's right where it is, 15,000. The 342.5s, 24,000. That's just these. And then in the puts, lots of stock trading, lots of options trading. Now, this bringing it down to 325. Okay, this is where it closed. 1, 2, 3, 4, 5, 6 strikes. It went through 6 strikes, taking it down. That changes a lot of positions that are wrapped around a close at any of these levels. So a lot can happen. Let's take another look. What other was being affected? Amazon. So when you start looking at these, this is how I determine when I'm telling you. Amazon closed at 34.35. Boom, right there. And then now it's trading at 34.15. So it's 1, 2, 3, 4, 5 strikes that it goes down. Look at these prices. That's all based on that price, not this price. So a lot of adjustments have been made. So it's going to cause a lot of volatility, not only in the options, but also in the stock, in the underlying. That then will cause volatility for us in our markets. So that's what we got in store for us tomorrow. So again, if we start to break down and we break below the hourly 50, it's going to put a negative spin on it. And as you can see, if we drop below this level, then we don't really have anything anymore. We've got some support at 15,300. Whip-de-doo. Then I have to go way over here to start finding additional support. So it just opens up a vacuum till next support at 197. And then the hourly 200 sits below that at 139. Can the NASDAQ die 200 points tomorrow? Sure can. Sure can. If I think it can go up 200, it certainly can go down 200. And I'll tell you what, it's going to go a lot faster going down than it did going up. because positions have to be reversed. If these stocks start to give it up, this index will have to, because again, I'm just going to go back over here. I'm going to show you. There is also the NQ. The NQ has options. So let me see if I can pull it up for me. No, yes. Guess not. There are options in, no, that froze me up. Oh, there you go. Okay. And then I lost it. Let me see if I can get it back. Let's go to those options, right? So the index closed at 15,000. It got as high as 483. 483, not even on this one. So now I got to open up all the strikes so that we can see where it's gone from. So now I can bring it back. Whoop, whoop, right there. 480. So it, no, that's 14. It's at 15,300. Excuse me very much. So it was up here, 480. Not much trading, but you can see it. Remember the last time we had this really miserable day in the index because it was on an expiration Friday and somebody came in and did a 500 lot in the options, which forced this huge amount of futures to come in and out all in one swing of 8 minutes. I did a whole thing anatomy of a trade on it. I don't prefer to do one tomorrow. So we need to be on our toes. We need to be prepared and willing to do whatever. We're not going to get married to either side. We want to play both sides. We want the stock market to go or the future to go up and down. We want the volatility. Volatility equals money. Excuse me. Been working on some allergies and a little bit of a cold. But so swings can be violent. To stay on your toes, continue to use your moving averages. Don't get married. Don't be thinking that, oh, it's going to swing and go back around. Volatility increases, so will the moves. You don't want to stick in a move on the wrong side because it can knock you down $1,000, $2,000, or $3,000 in a heartbeat. That's not the name of the game. The name of the game is to stay in and try to make money. So be willing to switch in and out quicker if you have to, or stand aside until a direction is more apparent and follow through is happening. Upside, we know the story. They're going to have to turn it around and the buyers are going to have to come in. They're going to put on their big boy pants and they're going to come in and just buy it. Just like they have done in many other places. Sell it off, buy it up. Sell it off, buy it up. Sell it off, buy it up. If they really believe that we belong up here and all of these stocks are going to blow the doors off, then that's what they're going to do. But now we have to wait and see. In that case, we got it down. We know these are our levels. We can figure this one out. Coming down, we know what's going to happen. If it starts to break below, if it breaks below 316, I'm looking for some pretty serious, more serious downside. That's one take. I'd be looking for acceleration. If it breaks below here, it's done. It's done. This is all over. And that sits as the high. Okay, so trade smart. Trade using moving averages, trade using the Elliott, trade using the Fibonacci. Put your extensions in, put your retracements in. Use everything to your disposal. Use your point of control. Use value area high and low. Use VWAP. It's all there for a reason because markets tend to gravitate towards them, hold them as support, etc., etc. We can do it. And tomorrow can be a fabulous day. I hope that for everybody. I'm going to leave it right there. And our next update will be on Sunday, the 24th.